All right, happy Friday, everyone. Safi Russell here from SDR Consulting, Inc., and welcome to Business Basics Friday. Whether you're joining us here on Facebook Live or Clubhouse, I hope all is well with you. And the purpose of Basic Business Fridays is to just cover topics that may provide value to small business owners and answer some questions that you may have towards the end in our Q&A session. And so a little background about myself. I've been in the industry about 19 years, and our focus here at SDR Consulting is working with a lot of small business owners, helping them from business formation all the way to tax preparation and all that fun stuff in between. Have a virtual practice, so we do work with clients all over. And so today we're going to cover just a brief topic regarding common business tax deductions. I'm going to kind of highlight about 4 or 5 of them and then open it up for Q&A at the end. And so I am managing, Facebook Live and Clubhouse here. So if you do have a question, I would like to get to it at the end as we open up for Q&A. So thank you for joining once again. I'm going to go ahead and share my screen just to go over a few slides. Okay, perfect. So first, let me just go over, who's considered a business owner before we even get into the expense topic. So if you are not an employee and you're either providing a service or selling a product to someone else and receiving money, you are a business owner. You're a sole proprietor, regardless if you have an established business set up in place already. And so this applies to you. You want to treat your business like a big business from the beginning, not necessarily when you are, an LLC or, making millions of dollars. It starts from the very beginning. And so I'm going to kind of cover the format of the Schedule C. However, whether you are a corporation or a partnership, the deductions are very similar, but I'm just going to follow the format of that Schedule C. So as you can see on the screen here, a few different deductions that are pretty common. I'm going to highlight on this page mainly the car and truck expenses, because this is a big one where there's a lot of misinformation out there that I want to definitely make sure to address. And so depending on your business structure, there's certain ways you can deduct the business use of your vehicle. But at the end of the day, tracking your miles is where it starts. So whether the vehicle is in your business name because you have an entity, or it's in your personal name, you're going to want to track your miles, because that's going to determine the business use versus personal use of that vehicle. There's 2 different methods that you can take with a vehicle. I'm going to put S corps to the side. If you're a sole proprietor, Schedule C, you have the option of taking standard mileage or actual expenses, and not both. Standard mileage, there's a prescribed standard rate for each year that comes about. So I believe we're in 2021. I believe the rate's 57 cents. It went down a little bit. So 57 cents per mile as a standard deduction for your mileage. That's option 1, meaning that you track your business miles and you track your total miles for the year, and then your business miles are multiplied times that standard mileage rate. Okay, so that's option 1. Option 2 is where you have actual expenses. And this is where you're going to track gas, maintenance, car insurance, repairs, and also be able to take depreciation on your vehicle. Now, with this method, you still need to track your miles, because even if you spend, thousands of dollars on gas for the year, if your business use is only 50% of that vehicle, then you can only take 50% of that gas charge. And so that's why it's important to track all of those expenses throughout the year, because you want to be able to have the total amount for the year, but also take the applicable percentage. So you can't do both. You can't track miles and write off your gas. That's double dipping. And so it's important to understand the difference between the 2. Now, when it comes to tracking, of course, there's all different apps out there. I'm sure we can list a few. MyLIQ is a very popular one that we've used. Also QuickBooks. So, most of the versions of QuickBooks now online have a tracking feature for mileage as well. So you can just leave it on, and pretty much as you drive, it'll track everything. And then maybe once a week or even daily, you can just swipe to determine, yes, this is business, or swipe to determine, yes, this is personal. So it all starts with mileage tracking. It's if you were audited by the IRS, they're looking for your mileage log to see where you went and what was the purpose. So it's important to keep that and not just use estimates. And definitely don't use round numbers. That's big red flag. Okay, so that's car and truck. Let's talk about next contract labor, because we're coming towards the end of the year. Many of you may use, contractors in your business, and so to differentiate between contractor and employee, a contractor is someone who, you know, works on their own schedule, probably has their own business or contracts out to others for their service, and you pay them just a set amount. There's no withholding or employee relationship there. If you have someone who is doing that in your business and you pay them over $600, you're going to need to most likely issue a 1099, now called NEC form to them, used to be called miscellaneous. So the 1099 NEC is the new form for contract labor payments over $600. It depends on the method of how you pay them in terms of the method of payment, whether it's credit card or check. That can vary in the filing requirement, as well as their structure. So if they are a corporation, that's really the main entity that you may not have to issue that 1099 for. But like I said, there's always exceptions. This deadline comes up by January 31st. So we're in the end of 2021 now. By January 31st, 2022, anyone you paid over 600 that falls under that contractor rule needs to have that form issued to them and filed with the IRS. So if you have if you have contractors, you want to get ahead of this by having a W-9 form from every contractor or service provider who works in your business. And by having that, you'll have the information needed so that you can file that 1099 NEC form. The 1099 miscellaneous is still around, but it's used for other types of payments. So that was a change that took effect for 2021. I'm sorry, 2020 actually. So once again, get that W-9 ahead of time before you even make your first payment. This way you don't have to chase them down at year end, so you can meet that filing deadline for your 1099 filing, because there are penalties for not filing or for late filing. So contract labor is a tricky one, because you may even have service providers like your accountant, or even your technology person, your web developer. All of these people are possibly subject to this contract labor 1099 filing requirement. All right, so a couple of other, items on here. I just want to highlight the main ones. Now, this topic that I'm covering, I do have available as a free course on my Teachable site, and I will go ahead and give that now so I don't forget. It's SDR, S as in Sam, D as in David, R as in Robert, .teachable.com, and you'll find this free course, Common Business Deductions, as well as another course, Business Startup Basics. So let's talk about meals and entertainment. There was definitely a change with meals and entertainment back in 2018. And so I want to make sure you're aware of it. And then a new change that came about this year only for now. So take meals as a standalone. Generally, meals were business meals, let me clarify, were deductible, 50% deductible for tax purposes. So you take a potential client or a client out for lunch, you you use your business card, and then when your taxes are done, 50% of that amount was deductible for tax purposes. Now, previously, meals and entertainment were 50% deductible, but starting in 2018, they separated the two. So entertainment by itself is not deductible. You can spend all you want on it, but for tax purposes, you can't write it off. So if you go to, lunch and then maybe go to a basketball game, and there's tickets involved with that game, the lunch would be deductible 50% previously, and then the meals, the entertainment, the basketball game itself, not deductible. So that's important. You want to spend your money wisely if you're going to have to incur those costs. For 2021, certain meals are 100% deductible right now for this year. We'll see if it, expands past this year. But meals, like pretty much in restaurants, there's some criteria of, what type of, where the meal is at and so on. But pretty much meals in a restaurant for this year, 2021, are 100% deductible. Entertainment, still not deductible. So keep that in mind when planning, meetings with clients, potential clients, or maybe taking staff out. The other thing with meals is that in town, in your local area, when you're meeting with those potential clients, that's a business meal, or if you're at a conference, for example. But when you just run out for lunch and then you come back home and you're working from home, that's not a business meal. So you want to definitely document your business meals, who you met with, what was the purpose, of course, the date and all that. Keep your receipts electronically, what I recommend, so they don't, wipe off with the ink. But your lunch by yourself, even if you're on the computer working is not a business meal generally. If you're out of state for business travel, then at that point, those meals while you're away from your home, overnight stay type of thing, took a flight somewhere, those meals would be allowed as business meals subject to 100% currently and 50% probably back in the future. So just don't start going out for lunch by yourself and writing those off as business meals. If you get audited, those will be denied. All right. So also on this page, I want to talk about wages briefly, just because we kind of highlighted independent contractors. A lot of people use the term, I hired someone or they work for me very loosely, and that could get you in trouble. And also, if you're in a structure where you're not a corporation and you're not set up as an employee, then what you pay yourself is not a wage. It's not a write-off. So if you're an LLC, if you're a sole proprietor, a partnership, and you're not taxed as an S corporation or C corporation and don't have yourself set up on payroll as an employee, your withdrawals from your account or checks you write to yourself are considered distributions, in some cases dividends. It's pretty much a withdrawal of your equity. That's not an expense for your business. So please don't put that in your wages expense. Wages is for traditional W-2 employees who are set up to run through payroll, who have withholding taken out of their checks. You file payroll returns to turn that money over and so on, and you pay half of their FICA. So wages and payroll taxes are specifically for employees, not for contractors, not for what you pay yourself, unless you are truly an employee on the books employee. So I wanted to make sure to cover that because that's something that's uncommon. People go to do taxes and sometimes they're like, oh, why do I owe so much? Or, oh, how could I have this much income? I paid myself such and such. That's not an expense. All right. And then the last thing I want to just highlight today is not on the screen is inventory. More and more people are going into the product business, whether it be online sales or you have an e-commerce store, et cetera. And just know that certain purchases you make for your business, some can be deducted right away in that first year, in the year you bought it, and some have to be deducted over time, inventory being one of them. So if you're in the business of selling pens and you buy 5,000 pens, when you buy those pens, they go in as assets, an inventory. It sits on the balance sheet. It's not currently deductible as an expense. When you sell each of those pens, then you write off the cost of those pens as an expense as you sell them. So if you, bought it for $5 each and you sell it for $10, when you make that $10 sale, then you write off the $5 and you have a $5 profit. So it's not at the time when you bought those, X amount of pens. All right. Same thing with certain assets. A lot of accelerated depreciation is around that can help you write off some of your computer purchases and furniture quickly in the first year, but there are other purchases that have to be split up over 5 years, 7 years, 39 years if it's a building improvement. So just understand, the better you know your numbers for your business and the better you know tax law, or the basics of it, or work with a qualified professional who can guide you throughout the year, then the better off you are, and you're not scrambling come tax season. If you're in business with, for yourself, no matter how small you are, you really should be working with a professional all year round, not just at year end and not just at tax time, so you can be prepared, plan, and definitely strategize for the best tax scenario. All right, so that's what I wanted to share for today on this Business Basics Friday. If anyone has a question, I'm going to go ahead and open it up for another minute or so. If you're on Clubhouse, feel free to just raise a hand or use the chat feature. If you're on Facebook, hopefully I can see your questions and I will try to get to them. And I'll wait for another minute or so. And so, perfect. All right. So with the fourth quarter now, oh goodness, today's October 1st. Happy October. We're officially in the fourth quarter. And so definitely if you need assistance with your business in terms of getting bookkeeping set up, getting well prepared for tax season, doing tax planning, definitely feel free to reach out and connect with me here at SDR Consulting. You can find us on social media at SDR Consulting and sdrconsultinginc.com, and our number is 516-255-6603. All right, so if there are no questions, everyone enjoy your Friday. We will be back next Friday with another session. And usually we'll have a guest speaker and then an open Q&A at the end. If there are some topics you would love to hear, feel free to connect with us and let us know. All right. Otherwise, everyone take care. Have a great day. Bye-bye.